Good evening, traders. Adam here from Bull Logic doing a market analysis with you. Looks like we finally saw some red in the markets today. The S&P down 0.6% today. Nice little pullback we're seeing. We stated yesterday that we were outside the Bollinger Bands and that we're going to need to pull back in it before we can really proceed forward. As you can see, we are now inside those Bollinger Bands. Looking at the Russell, which was also outside, we were starting to peak inside. I believe that the Bollinger Bands will be able to catch up to them tomorrow, as long as we don't make any sudden moves upwards. Looking back at the S&P, we did start our pullback here. We had a lot of selling coming into the close, as you can see on our 30-minute chart. Our first level of support is down at this 1420 level. Below that, we have the 20-day moving average. And then we also have these various levels coming in, both the 50-day moving average, this 1390 level, the 1397 level, and all this chopping here will be able to create some price resistance and price support areas. We are still overbought in the market, so we still need to do a pullback. Any kind of pullback here will still be beneficial to the bulls. It's what we want to see, a nice easy pullback so we can load up and move higher in the market. As you can see, we're already nearing our resistance up in this upper channel line. So we definitely need to pull back to actually work it off and move down the line so we can actually move higher in the long run. So any kind of pullback here is worthwhile. As you can see, the market has been going through a lot of these here lately. This last couple of months have been big run-ups and then nice little pullbacks and then more big run-ups, nice pullbacks, big run-up, pullback, and another big run-up, and then we kind of leveled out. And it looks like we may be ready for another leg higher. Not saying get heavy short here, but definitely limit the longs, maybe even reduce the swings a little bit until we can get a nice firm pullback where we can really load up on a good reward risk situation and get heavy long. Looking at the Russell, same situation as the S&P, nothing really outstanding here. It did sell off a little bit less than the S&P, so that's always good to see. Our first price level was that 833 level, and then we're coming all the way down to the 826 level before we really see price support. We still have the 20, the 50, and the $200 rising as support levels coming in. And again, we are seeing overbought conditions here down in the Russell, so we do need to work this off before we can really move higher and break over these highs. NASDAQ sold off a little bit more here than the other indexes, mostly because this is technology, and as everybody probably knows now, Apple had a pretty big day, a pretty big down day. So I had to see what's going to happen with them, see if they can't hold that 20-day moving average, or maybe they're going to pull back all the way into that 50. Apple's had a nice run up, and it's not a clear level of support. Besides that 20-day moving average, you have some areas like here in that 640 level, and some in the 650 level before you actually make it to that 50-day moving average. So I expect the NASDAQ to pull back a little bit more. I would expect us to come under this support level, that 3,090, 3,088 level, at least into that 20-day moving average, maybe even back here in this consolidation where there is a lot of price resistance and support. One thing to note today was the VIX spike, up almost 14% off of a very small pullback in the S&P. This is something that we should take note of because it is definitely a forewarning of stuff to happen. Right now in the market, we're waiting for the Germany ruling as their participation in the European bailout fund. They're due out on the 12th of September. That's in 2 days from now. So volatility is going to hold higher till then. Also, we have the Fed coming out on Thursday, and they are going to make their big announcement of what they're going to do with interest rates and tell us that the market is improving but doing it slowly, and they are willing to step in at any point. I don't believe that they are going to announce QE3, and I'm not too sure how many traders and investors out there are really expecting them to announce QE3 as quantitative easing for the third time, just because we are improving a bit here, and we should see some. We are improving a bit here, and we should be able to continue improving. And they don't want to use their last big bazooka. They don't want to fire it off right yet until we actually need it, and I don't think they're going to do that right now, just because we are making new highs in the market. Job numbers are improving as we saw last week, even if the numbers are a bit clouded, as some people might think. I don't think they're going to announce the QE3. I think they're just going to tell us the same thing they always tell us, and that the market is improving, but doing it slowly. So definitely look for a pullback here in the markets. I would expect another down day tomorrow, maybe bring us a little bit closer to this support level. When we do get closer to that support level, I might try my hand at a couple of longs, see if we can't swing some things higher. One of the setups I'll be looking for is pullback to support. Those are typically good if the market is also pulling back to support, and they can both run a little bit higher. Hopefully that helps everyone. We'll talk to you tomorrow.